What's up, fellas? What's up, ladies? What's going on, beautiful people, United States of America and around the world? Um, just wanted to talk to you guys today about something that is pretty important, super important, guys. This is going to be piggybacking off my last video of pretty much why people are neglecting to um, purchase life insurance. Okay. Now, there are some people that think, ahead, that think smart, that put their thinking caps on, and really are trying to uh, leave a legacy for their family, right? Protect their lives, leave a legacy for their family, or at least, even if it's not a legacy, right, guys? At least leaving something behind for their family, right? And this is something that I believe is super necessary. Okay, I think it's a requirement. Now, I'm definitely a man of God. Okay, a child of God, and I definitely believe in what the Bible says and what God's word says. And I know He says this in the Bible. Can't give you a verse, but I know it goes along the lines of a good man leaves an inheritance, right, for his children's children, right? So, and it's not just a man, guys. So don't think just man. Think man and woman, right? A woman is just a man version, right? It's a female, so it's a man version. A woman is a man with a womb, okay? So female, right? So a good woman and man leaves a inheritance for their children, right? For their children's children, right? And so I believe it's everybody's obligation, and it doesn't matter where you're coming from in life, right? It doesn't matter, um, you know, what color you are, where you're from, your health, your background. I believe that everybody should take that initiative, okay? And even if you're not a parent yet, right? Even if you don't have kids, it's always good to think ahead and think for the future, right? Because when that time in your life actually comes, right, you're not going to be moving back and forth, being flustered by, each way life takes you, right? So, you know, as I keep talking to people and different clients and people that I meet, right, I come across people that they're very interested in life insurance, right? They definitely know they want a policy. They definitely know they need it. It's like medicine, right? Some medicine the doctor prescribes to you, you know you need to take it, okay? Um, and I believe it's like, God. I believe it's like Jesus. Everybody needs Jesus, right? But besides that point, right, you know, um, it's like people understand that they need it, right? They contact me, they fill out the form, right? We end up talking. Some of the clients that I talk to, right, they know they need it, right? But then there's something while going through and trying to actually deliver them the policy and trying to actually set them up. Some clients, they end up backing out last second. Now, again, this could be for a variety of reasons, right? They know they need the coverage. They know it's important, right? They know they need the coverage. They know it's important for them and their family, right? They know it. They know it. So there's no arguing. There's no flip flopping. There's no giving up excuses, right? This is something you need, right? And again, it's not even just me, right, as a broker, right, or just me trying to sell them a policy, right? They came to me requesting information, knowing that they need it, right? Sitting down and talking with them, understanding their situation, right? But then the last second, right, it's either a few things, which I've seen. somebody else starts saying something that doesn't make sense, right? Somebody else starts saying something that doesn't make sense to them, and that somebody else is not even a licensed professional to be speaking on behalf of the products that we offer, to be speaking on behalf of what there is to life insurance. That other person that they're listening to, it could be a close relative, it could be their spouse, their wife, their boyfriend, right? It could be a friend from across the street, right? That other person that they're listening to, who really doesn't have really a clue what the value of life insurance is, saying that, oh, it's just going to be another bill that's going to be that you need to pay every month, right? It's just another thing. It's just another type of insurance, guys. Guys, that's absolutely false. Absolutely not true. And for the people that are thinking that way, I'm going to piggyback off my previous video that I made, and I'm going to say that these guys are short-term thinkers, okay? They're not thinking for the long term. They're not thinking for their lives, for their families' lives, for their children's lives. They're only thinking for the now. They're only looking at and saying, okay, and this is what I do. I always talk with my clients and always get them a rate that's going to be most suitable and affordable for them. But for the ones that are short-term thinkers, they're going to say, oh, you know, this $80 a month or $120 a month, sometimes $200-300 a month, right? Depending on where they go. This is just another bill that I have to pay, right? They're not thinking of the actual value of the insurance. They're not thinking of the actual value of the actual insurance that's in place, right? And so many people get it confused, right? And they think, oh, I'm just going to pay this every month, and I don't have, only my children have the death benefit, right? After I pass away, only my children or the beneficiaries that I put there, they only have access to the full amount of coverage. And sadly to say that, they just don't understand. They don't understand the full value of the product, right? So this is why I have to explain to most of my clients, most people that I speak with, that it's not just a death benefit, right? Say if something happens to you, then your children will be covered, right? It's also there's also living benefits as well. For example, if you become unemployed for a certain amount of time, the premiums may be waived for up to a year. For example, if there's living benefits as well. Say if you get a whole life policy or even an IUL, you start putting money in there like a savings account, right? Instead of putting it at the bank, growing I don't even know what percentage, you're not even getting any money out of there, right? You're putting this in this policy, you're growing it at a good at least 5, 6, 7%, probably even more, right? Also, guys, what's really interesting is that, you are able, especially with the whole life policies, also with IULs as well too, certain IULs as well too, you're able to say if you need access to that money, you've been paying, let's say, and what's good with the savings account, guys, I always say, think about it, use your brain, right? Think about it as a savings account, right? No matter even if you have a job, even if you're getting money through a business, right? Even if you have a solid job, you're gaining, let's even say you're earning less than minimum wage. Let's say if you're earning like $12 an hour, right? Which I don't think anybody should be getting paid less than $15 an hour or 16, right? But companies do what they do, right? But let's just say that's the case, right? Let's just say that's the case, okay? You're able to take that, instead of saving that money, say if you have to pay rent, you have to pay for, for your mortgage or your rent, or you have to pay for food, right? There's always some money left over that it's always good to save. And the statistics show that most of Americans don't have any money saved, don't have even more than $500 saved in their bank. Okay, that's just the statistics, right? So according to the numbers, right? So this is why with finances it's always good, right? And you're gonna hear it. You're probably gonna hear it from me. You're gonna hear it from somebody else. You might hear it from a friend. You might hear it from your parents, right? And if they're smart parents, they're gonna teach you about finances, right? They're not just gonna say, hey, go to school and do all this, and then you're gonna earn all this money, and next thing you know, you keep earning all of it, but then you keep spending it all. What you're earning and what you're spending, it's at a hundred. So that means you're not saving anything, right? That means that you're not smart, right? So, and again, if you want to consult with me, and we can talk more about getting a plan set up for your finances in the future and stuff like that as well too, right? I can't say too much, as I'm not a financial advisor, right? I don't want to give financial advice, but what I can say is it's always good to save money. Many people like to risk it, right? And I don't want to go too off topic here, right? But let's say, right, you have the $12 an hour job. You are putting money away in that IUL or even that whole life policy, right? Let's keep it simple. Whole life policy is growing at 4% a year. Okay. So you put that money in there for about a year, 2, 3, 4, 5 years. You don't touch it. You don't do anything. And this is important, guys, right? Because, and I'm even guilty of it as well. There are times where you put money in a savings and you think, oh, I have this. And you put it in your mind that, oh, I have this, right? So you always end up digging back in there. So there'd be times where, even if you're working, you're making money, right? There'd be times where you always end up digging back in there. But that's not smart, right? I had to realize that the hard way. That's not smart, right? If you keep digging in your savings account, it's not really a savings, right? That's really a checking account, right? So the whole point of savings is putting money in there and leaving it, acting like it's not even there, right? So let's say, instead of putting in the bank you're growing at less than 0%, you put that in a whole life policy, right? You put $100 a month away, and that's very doable. You put $100 a month away in the whole life, right? You're paying that policy. It's growing at that percentage. You're leaving it there for about 2, 3, 4, 5 years, right? And the policy term for a whole life is for your whole life, right? And there's different types of pay options too. If you guys want to discuss, we can do a 20-year pay option, 30-year pay option, depending, right? But it's going to be more than 10, right? But usually for whole life policy, it lasts your whole life. Okay, so you put that in there, right? You keep putting it in there, and it's growing at that percentage, and it's compounding every year, and you're not touching it. You're being smart and not touching it. In the next 3, 4, 5 years, if you're smart, you're able to go in that policy, look at it, and say, wow, look at the cash value that's growing in there. I can use this for my children's college tuition. I can use this for a down payment on a house. I can use this for a down payment on a car. I can use this to maybe go invest in property, invest in real estate, invest in a business, start my own company. I can use this money for a lot of different things. It gives you options, right? It gives you options, okay? So the real important thing, guys, too, right, is to know that, you have that cash value in there. You are able to borrow against that, right? You're able to take that money out too, but I would borrow against it. Reason why is because you're going to keep the interest rate going. Even though you're borrowing against it, you can pay it back, but there's not a set time that you have to pay it back as well. So you have more flexibility than going to the bank and asking for a loan. That means you are the bank. You're requesting a loan from your hard-earned money, right? And the money that's growing for you, right? So you have that kind of concept, that mindset where, yes, I'm putting that money away, but it's saving. Instead of putting that $100 away in a savings account, you use your brain and you're smart and you say, wait, I can actually get a policy that's going to grow more in the bank, and my life's going to be protected. So if you really think about it, guys, you think that if you put $100 in the bank, right, every month, right, you think that your life is protected by doing that? You think that your children's lives are protected when you do that? You think when you put that money in the bank that, you have living benefits when you do that? You don't have anything when you do that. The bank has all the leverage against you, right? So when you invest in yourself and you really listen to, insurance brokers and agents like me and say other people who are trying to make sense, right? Who are trying to get through your head to say, instead of putting that $100 a month that you would into a savings account, right? Or anything like that, you can put that into an actual policy, still be able to borrow against it and use that money whenever you want without even having to go to the bank to request a loan. Say if you were to go to the bank, you put money, imagine this, guys, use your brain, this scenario, right? You go to the bank, you end up putting, let's say $100, $200 a month at the bank for about 2 years. Let's say for about a year, right? Let's say for about a year. You put let's say $200 away, right? Saving at the bank for about a year, right? If you do the math, guys, right? Let's say that's around $2,000. Let's just round it up to $2,000. And when you go to the bank, let's say you need to get a loan because you're looking to buy a house, right? Let's say you're looking to maybe get a loan and investing in a business, right? Or you're looking to put a down payment on something, right? You go to the bank, you're putting money in that bank savings account, but you go to the bank and you request a loan and they deny you, right? Or let's say if they approve you and they give you a ridiculous interest rate, right? So now you have more debt, no coverage, your family's not covered, you have no living benefit, you just went and got a loan from the bank, and now you're playing with the bank's money. Now you owe the bank. Now the crazy thing is, guys, now you owe the bank on a time schedule. And if you don't pay, they're going to report you to your credit agencies, to the IRS, and all these people, right? So let's look on the second side. When you put the same $2,000 in a savings account in the bank, instead of doing that, you put it in an actual whole life policy. Let's say the whole life policy is growing at 4%, which is pretty average, which is pretty normal, right? You put it in a whole life policy. Let's say you put it in there for about a year. You put that same 2,000 in, right? It's been a year, you put that same 2,000 in. Instead of that, that 2,000 will also grow at 4%. So you want to tack on that 4%. At the bank, you're growing it at 0.001%, which is only off of $2,000 is probably less than $1. At 4% of 2,000, you do the math right there. I think that's at 4% of 2,000. That's at least maybe a couple $100. At least it's 4% and it's growing. What other benefits do you have? If you need to borrow, let's say you need to borrow $500 from there, you can always borrow $500. Even if you borrow $500, your cash value now is at, let's say, 15, that 15 is still growing at that 4% annual interest rate. Also, your family's life is still covered. Also, you still have living benefits. Also, when you try to go for a loan, right, and in the policy, you're not going to get hit with all this credit check and all this stuff. You call me and you say, Calvin, I've been putting money into that whole life policy that you've been talking about. I want to request, or, you call me, and then obviously I'm going to have to call the insurance agency, or say, let's see, you didn't even call me, right? You're maybe confused. I'm going to let you know, hey, hey, Bob, you're going to have to call the insurance company, right? And request that money, right? Or I can definitely help that out too. Let's say if you're new, you don't have a lot of time, I can definitely help you do that, right? They're going to have to cut you a check, right? And without any questions, right? Without any questions. There's no questions. There's nothing. There's no filling out a form. It's your money. It's in the contract. It's there and it's growing, right? That's that money. Let's say if you needed to borrow, it's there, right? So you're able to borrow without any hassle with really super, super low interest rates, about 1 at most 2% if you were to borrow. And even if you did borrow, some is at 0 to 2%, right? 0% interest rate. Then you, and that's depending on the product, right? And we can always go over that, no problem. And don't even worry about the interest rate too, guys, if you were to borrow for your own loan, because you got to remember that your cash value is still growing at 4%, 4 or 5%, which is still more. So don't even worry about that. And you also have living benefits. So if something were to happen to you, critical illness, maybe, accident, something happened to you, you're able to, and also let's say something happened to you, you're in the hospital, right? You can only perform, let's say, at least 2 out of the 6 living activities. Let's say you can't even perform going to the bathroom by yourself or getting dressed by yourself, right? You still have access to that money, right? Say if something, God forbid, were to really happen to you, right? You end up in a coma, that money is still there and it's yours. You have access to that full amount of coverage, okay? Also, so your life is covered, your family's life is covered. That money is growing at 4%, way better than the bank. You have access to that. Say if you were to borrow, it's all yours, no question, no going through credit check. And you're still growing that money. And say if you're smart, you don't even touch it for about 5-10 years. It's just automatic. Instead of, people do this all the time, put money in the savings account for 5-10 years. It's not growing anything. And they don't have life insurance, their family's not protected, their lives are not protected, but you want to protect the bank, right? But instead, if you were smart, you do the same thing over here with the actual policy. Your life's protected, your family's life's protected. You have access to that money whenever you want. You can pull it out whenever you want, no questions asked, right? And you can also roll that money into a new policy, let's say if you wanted to, right? And that money is just yours. It's guaranteed, right? It's guaranteed yours. Let's say in the next, and I don't recommend doing this, but legally you can. Let's say in the next 6 months, let's say you put $500 in the next 6 months. Say, man, hard times, I need to borrow about like 400. You remember, oh shoot, I got the whole life policy. It has $3,000 in there. I can borrow from there and I can pay it back whenever. Instead, with the bank, you try to get a $1,000 loan, they give you the loan maybe at a higher interest rate and say, hey, you got about 60 days to pay this back. Or maybe you go to another loan company and says, or one of those small pay loan companies, right? Be careful of those. They have high interest rate. You got to pay this back, or else, they have the opportunity to reach out to those credit agencies and knock down your credit score. So now it's going to seem like, oh, you're not credit worthy to get a house, to get a car, to get anything like that, right? So this is why it's very important, guys. It's very important to think big, right? To think long term. Stop thinking short term, right? Many people think short term, right? And um, it's really sad, and it's sad too. Don't listen to other people, right? It's sad too, guys, right? Let's say, guys, it's sad because let's say, you're only thinking about the now and the money, right? But you're not, you're saying, oh, I can't afford. As soon as you say I can't afford something, it really does something to your brain. It does something to kind of, your self-esteem almost, thinking, oh, I can't afford this, right? And obviously you're looking at your reality, right? But wealth really starts in the mind, right? It doesn't start from whatever's outside of you, guys. It starts in the mind, right? So stop saying that, right? That's what I would obviously that's what I would tell anybody, right? But let's say guys, right? Um, you know, let's say, you know what, Calvin, I'm not really able to afford 80 a month, right? And I'd say, okay, well, how much can you afford? And then we'll go from there, you know. Let's knock it down to 60, 70. I'd say, okay, perfect, right? But make sure you're able to pay that 60, 70 for the 60, 70 a month for the full time of the policy and give no excuses, right? And you can't say anything like that, right? You really can't say, and you can't say, oh, I can't afford, because we're all working, right? So there's no excuse, right? We're all working, we're all paying bills, we're all doing what we have to do, right? So, saying, oh, you can't afford, that really to me is saying that you may not be even ready, right? Or even saying to me that, you need to switch the way you start thinking, right? Because you can afford it, you can do it. If you're paying, and I was talking to this other guy too, which is really sad, and I almost got him a policy, right? But you know why he didn't get that policy? And I knew why, right? And we were so close. I got him a great quote, right? And so first, this is how it was. I got him a quote at at AIG, right? It's about 240 something a month for a whole life policy, right? A little bit expensive for him, so I said, okay, that is pretty expensive. So I did my research, and I got him another policy, about 119. Meanwhile, guys, let me tell you guys, the first time I talked to him, he said he can afford, let's say he can afford about $40 a month. Okay, I said okay. He told me his finances. I broke down his finances. He said he can only, make about 800 a month. He only makes about 800 a month. Okay. And I said, okay, that's not bad. There are people in other countries that are only making $200 a month, right? Even less than $100 a month. Imagine living, guys, less than $100 a month. You can only pay for little bitty things like food, this, that. Once you think, guys, you got to put this into perspective. If you think you got it bad, there's somebody else that has it worse, right? So this is why I say, guys, there's really no excuse. But anyways, so we looked at a policy 250. He said, okay, that's too expensive. I said, all right, that's probably too expensive, right? We talked him down to 119, right? We talked him down to 119. So he was kind of considering it, right? Then his legal representative, right, which I think it was, or his girlfriend, right, kept talking in his ear, saying, oh, you shouldn't get that policy. Oh, you don't need it. You don't. This is another example where somebody else who doesn't really know the value is gonna talk and start saying something they don't understand, right? So we start talking, 119, and I go over his finances, like, Gary, I mean, I said, you said you make $800 a month, right? You say you make 800, right? We're able to knock it down to 119. You gave me the bills that you gave, and you still have an extra about $400 a month left. So you can't pay that 119 out of that 400. He was like, nah, man, that's too much. That's too much. I said, okay. So, I kept doing my thing, kept working with him. I really did want to get him a policy. He said he wanted to leave, money behind for his daughter, which I thought was really good and really nice. So I worked him down to get him a policy around $42 a month. And originally, he even said, I'm able to afford only about $40 a month. So I said, Gary, this is perfect. This is perfect for you. You got $42 a month. First of all, and also your health, you're a smoker. You smoke a lot. You have COPD. We're able to get you this policy, and we're able to get you that $8,000 coverage, right? So at least if something happens, right, your daughter is going to get that money, right? Meanwhile, you also have a few living benefits with this, Gary, right? And he was saying, yeah, I know. But then, right, so a little bit, he was on the fence. Then again, his legal representative saying, oh, $40 a month, I don't know. But then she kept talking, right? And I can tell he was kind of getting a little bit nervous, a little bit kind of between, yes, I want it, but then no, I don't want it, right? And the crazy thing that he said after, so I'm like, Gary, like, you said, we went over your finances. You're able to afford this, no problem. But then it's not if the client is able to afford it. There's sometimes it's something more. He said something really, really, I think it was really like just really dumb. He said, you know what? He said, you know what? I got to get my cigarettes, man. I need that $40 for my cigarettes. I'd rather cash out on my cigarettes. Then I said, wow. So you have all this savings, right? You have the ability to do this and still get your cigarettes, but you still want to use that money to buy more cigarettes to kill yourself even more rather than protect your own daughter, right? And I'm thinking, wow, the audacity of people that I come across. That just shows. And I was like, man. And I told that my manager, and he was like, that guy's really dumb. And I said, I mean, he said that first, but then I was like, yeah, that guy is pretty dumb. So you'd rather spend $40 a month, $40. It's not. It is $40 a month, right? $40. You smoke a pack a day. $40. That's gonna be you're going to the gas station to pick up that crap. 4 days. I know, like, cigarettes, I think are like maybe like $8, $10, $12. 4 days, right? 4 days, and out of the week, you're gonna spend that money on cigarettes instead of using that to put it into a great cause, into protecting your life and your family's life. You'd rather use it to destroy your life. And I said, you know what? I can't work with this guy. Instead of helping your life, you'd rather use it to destroy your life. So I say, you know what? I can't work with this guy. And then he was like, you know what? I don't really know if I want. I said, you know what? That's fine, Gary. I mean, have a great life. Have a good time. When you really think about the thinking of that, it really just made me sick, right? Because you have the opportunity to do that, but instead you're going to use it for short-term gratification. That's going to end up killing you in the next 2, 3, 4, maybe even 5 years, if he's lucky. We'll see, right? I don't know, right? And hopefully he is, right? Praise God. But in actual reality, when you have COPD and you're smoking and you have all that in your lungs, in reality, we already know, right? So at the end of the day, guys, at the end of the day, um, you know, we really got to get through the mindset of people. I really want people to understand. But some people, guys, and that's fine, they're not going to really understand, right? And they're not going to really get it. And some people are going to be stuck in their ways, and that's okay. One day I know they'll call me back. So, uh, you know, and that's with anything, guys. That's with anything, right? That's with anything. And I always trace it back to the Bible. I always say, you know what? There are people that are going to believe in Jesus, the King of Kings, and there's going to be people that are non-believers who just don't believe, right? So you just leave them alone. There's nothing you can do. Their time will come, if anything. So, you know, anyways, guys, this is what I wanted to come and talk to you guys about today. Understanding the value. Stop thinking short term. Stop thinking like that guy, that example that I just gave. Don't think like him. You got to think differently, right? When you're really thinking about the value of your life, the value of your children's life, the value of your children's life, your grandchildren, your great grandchildren, it's something that's precious, right? So, you know, it really takes it just really takes a different type of thinking, right? And stop thinking that, oh, guys, we work, we got bills to pay. Everybody's got bills to pay every month, right? Everyone's got bills to pay every month. It's the whole cycle. Every year, it's every month, it's every week, every month, every year. Is a whole cycle. Companies are you're always gonna need business. You're always gonna need to pay for something. You're always gonna need bills. It's always gonna be there, right? You're always gonna need to pay for something. You're always gonna want something, right? So at the end of the day, guys, right? At the end of the day, right? You need to think long term, right? What's gonna be smart for me, for my family, for my great children, great grandchildren, right? And beyond, right? So that's all I have to say to you guys today, guys, right? If you're looking for, like I said, if you're looking for a consultation, I'm here. You can go on my website as well too. I'll leave a link in the description. You can go check it out. Request free quote if you want to. I'll follow up with you. You can type in your information, follow up with you, or you can give me a call as well too. I'll put that in the description. I'll see you guys soon in the next one. All right, peace out.